Hello and welcome back to Payroll Question Time. Just going to give a few more minutes to let everyone join the webinar. So I hope you are all having a good fun day Friday as we're looking to celebrate a bit of a Payroll Question Time anniversary. It's our 2nd year anniversary today, which is exciting. My 1-year anniversary as host. So really excited to still be here with these panel experts you can see to my right and left, depending on your Zoom view. But yeah, time has flown, isn't it, Simon?
It seems strange from that first time, from the COVID sort of affecting us instantly and us launching Payroll Question Time. So yeah, it's quick 2 years. Of course, I still look as young as then, don't I?
Yeah, like Benjamin Button, Simon. Every year you
Benjamin, yes.
There you go. There you go. Well, as people join us, please remember we want all of you to help us shape today's conversation with your very own questions. It's very much a live Q&A, so put your questions in the box. I'll do my best to ask those as we go, and our expert panel today of Simon and Andy will do their very best to answer them in real time as well. Feel free to be as challenging as you like. Always good to try and catch them a little bit off guard. Don't be afraid to ask any question. No such thing as a silly question. So do put it in the box. We'll do our best to answer them as we can. And of course, if we don't for any reason get through them all today, or we don't have the answers, then don't worry. Our experts will follow up with a document transcript, which can give you the answers to those questions over the next few days. Now, before I do introduce you all to our fantastic panel, I'm going to quickly run through a little bit of housekeeping. So number one, questions I mentioned, please do put them in the chat box and we'll try and answer those. But of course, it may well help shape future conversations as well. So if there are burning questions and we get lots of them, do put them in the box and that will help shape future conversations. We are going to have a couple of polls in here as well. So do get your fingers at the ready when that happens. We want to hear your views, so please do take part and our experts will comment on those results. We are, of course, recording this session, but more importantly, that means you will get a copy of the slides and this session once this session is over. And there will be a survey in that email as well. So please do fill in that survey. Let us know what you'd like to talk about in a future Payroll Question Time, and we'll do our ever best to include it in future topics. Last but not least, I'm just going to read you all our legal disclaimer, which says the presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. So now we've got that out of the way, delighted to say, for those that missed it, this is our 2-year Payroll Question Time anniversary. That's right, going for 2 years today. It's a new financial year for all of you as well. So we're going to be talking about that. It's my 1-year anniversary as host, which I'm really excited about. So let me introduce you a little bit to my background. My name is Nick Day. I'm host, of course, of this show, but I'm also host of the Payroll Podcast. I'm a Reward 300 member and founder of JJ Recruitment, which is a specialist payroll recruitment company. I've been working in payroll recruitment for nearly 20 years. I've seen the industry change significantly over those 2 decades, but particularly in the last year. It's been a really exciting time to be in payroll. We've seen a phenomenal focus on companies actually raising the profile of payroll, hiring top talent, increasing salaries, offering flexible working and loads more. Finally, it's getting the respect it deserves. So really excited to see the next 12 months and what we've got to unfold in front of us. But that's enough of me. Let me introduce you to our panel. On my left, I have Simon. On my right, I have Andy. So let's start with you. Simon, introduce yourself. And if you can, let us know what you've seen significantly change over the last 12 months.
Okay, good afternoon, everyone, and it's great to be with you on Payroll Question Time again. I think this is my 2nd year anniversary date, if it's your first, Nick. So very much there from the start from our colleagues at DWF, who unfortunately are unable to be with us today. But yeah, my background, I joined Centerfile back in 1984. I know I must have been a baby at the time, probably was actually, but 1984, after being with Sun Alliance in their IT department and joined a group developing new payroll software. I have a Master of Science in Payroll Management and I'm a fellow of the Chartered Institute of Payroll Professionals, also part of Reward 300. I have been since the inception of the Payroll Top 50 back in whenever it was that 2009, I'm going to guess. But some years ago, I had the Strathern Lifetime Achievement Award as well in 2012, which seems a bit strange to me, and it did at the time because I felt too young when they awarded it, but I received that award from Payroll and Benefits. And my role in SD Works is as the UK compliance, the Director of UK Compliance Strategies. So my team look at the legal changes that apply and ensure that they're developed into the pay solutions. Now, there are sort of a couple of levels. There's legislation that's core into the solution, and then there's legislation that's within your process and applications. Does that make sense? We have responsibility for the core, the engine, and how it calculates things like tax and national insurance. However, you will have responsibility for things like how you set your pension scheme rules and how you set other policies like holiday pay and police national minimum wage. So we may have tools that can help you, but the responsibility lays with yourselves as the employer because they're subjective. But it's great to be here, and long may we continue on PQT.
So what's been the one significant thing you've seen changed in over the last 12 months, Simon?
One significant thing, I think there's a transformation on a number of things. So are we in this realization that at some point we've got to start paying for all this expense that we've had? There are significant changes that we'll see. We've got introduction of health and social care levy. National minimum wage revolution is coming in. The significant change over, I'm coming up with a whole list of them, Nick. It was a daft question for me, wasn't it? You can't pin me down to one.
No, that's probably fair. Well, we're going to get through some of that in today's conversation as well. Let me introduce then to my right, as I look at the screen, which is Andy Nichols, Industry Liaison Manager at the Pensions Regulator. Andy, if you'd like to introduce yourself and let us know something that you've seen change significantly over the last 12 months.
Hi everyone, yeah, Andy. In my role at Regulator is really to help payroll professionals and payroll software companies, particularly with pensions generally, but mainly automatic enrolment. And it's funny picking up on Simon's point. The employer, for instance, has all responsibility for automatic enrolment, but obviously software helps the employer meet those requirements. But legislation applies to the employer. But whatever is built into a software system for automatic enrolment, whatever functionality is there, has to be compliant. So it has to be checked to make sure it's okay. But actually the duty still lies with the employer. And the wonderful joys of legislation, etc. What do I think? I mean, yeah, my background's all payroll, which is why I'm here, I suppose, because it bridges the link between that and pensions. Changes in, well, when you think about the world of pension, you got pensions dashboard has been going along in the background where people are able to see what pensions they've got, and that has a slight impact on payroll potentially, because the data that comes out of payroll feeds into pension providers, which then feeds from the pension provider into this dashboard project, which will be watch the space in terms of individually be interesting. Lots of things been going on in the world of payroll, lots of changes, coming out of COVID. Hybrid working all has an impact on our working lives, etc. So yes, that's probably me for the moment. Yep.
Excellent, thank you, Andy. Well, let's dive into some of these then. Let's find out what we're going to be talking about today. So today's topic discussions are national insurance changes in April and July 2022, changes to the health and social care levy, changes to state pensions from April 22, changes to national minimum wage, the P&O ferry controversy, and some of the new statutory code to prevent fire and rehire, eco-car schemes, COVID-19 sickness policy and the digitalisation of its notes, and wrapping up the tax year 2021-22. So let's dive into the first of those subject areas then. It's something that I know is close to Simon's heart, which is national insurance changes. So Simon, what are the key points here we need to think about?
Yeah, sure. So we've probably not hit it yet, but employees will certainly notice it fairly soon, and maybe the employer's budget will as well, because you're aware that national insurance has increased by 1.25% on both sides to take care of the health and social care levy. That's operational from the 6th of April, 2 days ago. Seeing a lot of questions on social media, a lot of misunderstandings. So we've had a number of people question the fact that this Friday's pay is using the new NI rates. And the rationale for claiming that it shouldn't is because it was worked last week. The reality is, if you're paying it on Friday, it's the 8th of April. Yeah, today is 8th of April.
Yeah.
It's after the 6th of April. The new national insurance rules apply. So it's not when you work, it's when you pay it that sets the rules. So last week's work budget is up by that national insurance increase. So just be aware. The other scenario is we've had lots of speculation over these past few months of whether the health and social care levy rise would actually be removed. And lots and lots of hints that maybe that was a consideration. And then we had Boris and Rishi deny it and say it's not going to be removed, it's going to carry on. So, but in the spring statement, a week and a half ago, is it now, 2 weeks ago, they announced a change to the primary threshold. Now, some are asking questions and saying, well, of course, there'll be a rise to the secondary threshold as well. So the employer doesn't get hit by the rise. There is no change to the secondary threshold. It's staying exactly where it was. There is a hit. So the secondary NI liability is going up and stays that way. But for employees, it's going to change a little because the primary threshold is increasing to match the tax-free allowance amount from the 6th of July. Now, what's the judgment point? Is it when you work or is it when you pay? Standard rules, CWG2, I think it's section 1.3, but I'm saying that from memory. And then you go down about 3 paragraphs, and I'm saying that from memory. The taxation point is, and the national insurance application point is the date of payment. So it's when you pay it. So will some people rush either way or delay payments? You could sort of do that, but it's an element. If you pay it on the 5th, the old primary threshold applies. If you pay it on the 6th of July, the new primary threshold applies. When does that pay relate to? Absolutely doesn't really matter. It's when it's paid and made available for the individual to be able to spend it. So they're the important factors, I think, to remember. And of course, they don't want directors to have the whole benefit of the 12,570. So they're doing a number of weeks at the old and a number of weeks at the new, which comes with the 11,908 value. Hopefully I've remembered that one right. But so for directors, national insurance is an annual method which is different. Now, Rishi kind of hinted that in some of the interviews that the delay was so that software could get ready. Now, some people have taken that software couldn't get ready. Well, with the announcement of when it was made, it would have been very difficult. But he could have made that announcement 3 months ago if he'd so chosen to. The reality is, I'd suggest, there was never any indication that it was ever going to start from the 6th of April. It was always going to start later. So that makes it a fairly complex change. So there's an element of when can you feasibly put that in? That would have been a challenge inside government, never mind outside government. Although, of course, developments have to follow certain quality routines, etc. But no, I think payroll software, will it be ready for the 6th of July implementation? I imagine you'll find that that's delivered fairly soon.
Well, that a little question on that then, Simon, because how did you feel as a payroll professional, even as someone who's working for a software provider in SD Works, feel about the statement stating that the reason they were delaying this until July was to give payroll providers time to get ready? Because I spoke to a COO of another firm, payroll provider, who felt very confident that actually that was a bit unfair on payroll providers, and they were ready right now, and they've had dealt with much more complex changes in the world of payroll, in a heartbeat, rather than wait till July. So how did you feel about that being given as the reason?
Well, I'm not sure he did give that as the reason for the delay. I think he probably gave that the software would have to get ready, which is true. But if the government are stating it was delayed for software, that would be false, because they weren't of our software. this is a government policy and a government decision. However, there will have been some consultations on proposals to ask what the implication would be for the input. But I think, Nick, the challenge may be, and I'm going to be a bit cheeky for that COO or CEO, is that they don't like this change because it's complicated to do. And it would have been easier to apply a 6th of April change. I agree with that. However, the Treasury never offered that, ever, even in pre-consultations. The consultation was always that it would be a post 6th of April change. Now, why? And I think now I'm going into opinion and views here, so don't hold me to these. Why? And that's if it was brought to the 6th of April, a number of us wouldn't have noticed the change because it would in effect kept a status quo and wiped out the health and social care levy for the lower paid. And for the higher paid, we would have noticed some change, but it'd be offset by the rising of the primary threshold, and it would hit the secondary threshold. The reality is, what's the best way of putting the price rise on a Mars bar? Well, the best way of putting a price rise on a Mars bar is to put the price up and knock some pence off. And then you get rid of the discount and you were always getting it cheaper, weren't you? Whereas in reality, you paid more all along. And so I think there's an element of they want us to feel it to then in July go, phew, that's not so bad. Sorry, okay. Is that a bit too speculative?
No,
but I think there's an element of sometimes what you do is you do something harder and then relax it, and we feel fantastic. It's not as bad as we thought.
Sure. No, that I think we said makes sense. I think there was some disappointment out there in the world about the fact that it's going to cost some of the, incomes well up to about 35,000, about £90 in additional costs as a result of the delayed change. And for some, that's going to hit them quite hard, particularly with higher energy prices and things like that.
Well, I'll put another view, Nick, is could the Chancellor have done something about that? And the answer is yes. In July, he could have put the primary threshold for this year even higher, couldn't he? So there's an element of thinking we're paying £95 more than we needed to. The Chancellor could have charged us £95 less for the remainder of the tax year if he wanted to. But as well, I'll give you a view. I don't think it was ever the intention to give people that £95.
No, I'd agree with you on that as well, as my view, for sure. Well, the good news is we've had our first question in from our audience, which is great. So I'm going to start with this one for you, Simon. For the last 2 years, my company has been paying all staff a tax-free working from home allowance of £26 per month, as allowed by HMRC. Like many companies, we have now gone to a hybrid arrangement, broadly 3 days in the office and 2 days at home per week. In the new fiscal year, can we continue to pay this allowance tax-free?
I'm regulated in my own right to give tax advice, and I guess we've already had the caveat at the beginning of the disclaimer.
We have.
On behalf of SD Works, I can't give tax advice. It's a regulated activity. Personally, I potentially could. I think there's an element of look at the latest regulations. When the allowance came in originally, and I'm going back some time, it was £3 per week. It was for occasional working from home allowance and had no questions asked. It's changed, it went to £4, and then at the beginning of COVID rose to £6 a week or £26 a month. If you actually pay it, you can pay 26 because it's rounded up to a whole pound. That allowance can continue, but you need to look at the revised conditions for doing it. Under COVID, the government have been fairly relaxed. So if you worked at home one day, you could have the allowance for the whole year. Is that really the case going forward? I'd say look at the guidance on HMRC. Also, now we're in this hybrid situation, there's an element of thinking, what's the regularity of working in an office? So is that now your permanent workplace on particular days, or is it a bit more random? So there's a whole plethora of legislation around expenses and benefits and travel in relation to where you work. For example, officially I'm a home worker, have been since 2002, so that's 20 years, predates this, and seeing what the arrangements are. Do I travel on business? Of course I do, not so much over the past 2 years, but certainly used to do a lot of travel. I think in essence, I'm saying yes, the £26 a month or £6 a week can continue for those who are working at home, but you need to look carefully at the guidance because it's all say slight different things in relation to choice and whether the employee is choosing to do something as opposed to there is a requirement to do something. However, it's a tricky one, isn't it? Because I'm thinking of the SD Works offices, our own. Most of them actually don't have any desks anymore. So no one really has a permanent workplace that they can call their own with their own drawer of, staple removers and
Sure.
staplers and all that sort of thing,
World
and
of
a
hot desking.
screwdriver. That's right. Now it's meeting areas, and they're not singular generally either. They tend to be more for mini teams or larger teams or large rooms. So they're built as rooms for people to work together as opposed to an office to go and work. So, but it's very interesting to go and read the guidance. So I've sort of given a half answer there, Nick, to say yes, no, and maybe. But it depends on the circumstance of the individual. And there is new guidance has been published by HMRC on when it does apply.
Excellent, fantastic. Well, listen, before we go into our next topic, let's try and get the audience involved in our first poll. Check their reaction times here. The first poll we're going to have is related to the payslip message. And we're going to ask, have you added a payslip message about the health and social care levy? The options are yes, and we're actively communicating about the change. Not yet, but we plan to. No, not planning to, or undecided. So if you can put your answers there, we're going to comment on those results as they come back, which will be nice and exciting. And I'll ask for some commentary on those. Please do continue to put your questions in the question box as well. If anything you want us to cover, that would be absolutely super as well. And while we'll do that, we'll open up our next topic, which is going to be changes to the health and social care levy, which obviously links to the poll.
Has that poll worked there? Have people been able to answer it? It's I just don't know.
Just a moment. I'm just trying to relaunch the poll. If you just give me 1 second.
Thank you. That's great. Otherwise, we'll have no one that's chosen anything. Is that right?
Oh, I've got manually muted. So while we're waiting for those poll results, Simon, perhaps we can open up on the health and social care levy and some of the changes.
Yes, certainly. So the health and social care levy has come into play. The government have asked if we would put a payslip message on. It's not law. There's no legal requirement to do it. But there's a lot of social media debate going on. I think we've probably even seen that in the payroll WhatsApp group to a certain extent, maybe even on the HR leaders one, and certainly on some of the others, of whether people will or won't. So it'd be interesting to see the results. I think that most will probably comply, but some of the larger businesses seem to be a bit, put it this way, concerned of this message and what it's for. And actually many have chosen to do alternate messaging to their employees. But some in those sorts of responses that you and I kind of see, Nick, kind of why we communicating it? Why don't the government communicate it? They're the owners of their tax customers, as they call them these days. Why don't they? But I think we are seeing that. So there's lots of articles been in the press this week on it. There are tweets and elements that are showing it. So hopefully the poll's open now, is it, Ezra?
It seems it is open now.
Yes, the poll is open now.
Thank you. But it'd be interesting to see what people are doing. Occasionally we're getting people saying, why haven't you just put it automatically on? It's not law, so there's an element of it needs your agreement to put it on. Can SD Works facilitate the message on its pay slips? Absolutely. It can facilitate a number of messages on the pay slips. And if you want this one to be on there, ask for it and it will be. You can actually even say how long you want it to live, but basically it needs to be there for a year. But some of the examples I've seen online also, because some are showing actually the payslip message, they started before the 6th of April. So they're actually appeared in previous months, which is interesting because there's no real requirement to do that, and it doesn't really apply to any prior periods.
Simon, how does it impact on salary sacrifice schemes?
Yeah, so I actually think it makes them a lot more attractive. There is a downside. So for the high paid careers, those that are paying above minimum wage once you've sacrificed, there's more of an attraction. And I was working this out a little bit on a pension contribution. I should have had the example here. It would have been good to show, but there was an element of thinking, if I put £1,000 salary sacrifice into a pension scheme, at the moment, if you're a higher rate taxpayer, someone paying 40%, you're actually saving 42%. So your pension contribution has cost you 42% less. Of course, with the new levy coming in, that rises to 43.25% less, which actually, when you look at the values, adds a significant amount of money over time. So, for example, smart pension contributions seem more attractive. So that's interesting. The other aspect,
results coming now
yes.
as well. So Andy and Simon, what are your thoughts on those results? 27%, yes, we're actively communicating about the changes, the one that's just ahead of the others.
Yes, interesting results. I don't think they're necessarily a surprise there overly. I think it's one of those ones of what's the right answer to this question? The answer is yes, no, or maybe. And we've put some yes, no's and some maybes there. And we're seeing that in the debates, aren't we, even on social media? So I don't think there is a single answer that people are coming up with. There's quite a good spread.
It is a good spread. Why do you think that hasn't been communicated that heavily by HMRC? We haven't seemed to have seen much or read much about this in the news channels recently. Well, certainly I haven't.
Now, I've seen a couple of articles on some of the, not necessarily broadsheets as they were known, but they tend to be online rather than the physical paper, talking about the rise a little bit. This week I have seen, and yeah, I have seen some tweets which come from HMRC about it, or even some Facebook messaging. But that might be because I'm a strange sort of fella that kind of follows that type of stuff, whereas I guess the ordinary man on the street probably doesn't for some reason, because they don't really want anything to do with that tax and national insurance thing, really. But those strange payroll people seem to follow Facebook pages about HMRC and DWP for some reason.
Very wise.
What
very wise. I think.
Yes.
I was thinking that for me, if I had to go back to my payroll roles, etc., I was thinking then, am I going to get a lot of questions from my employees as to why my national insurance has gone up if they realise it? And maybe putting the message on a payslip might be worthwhile doing that, especially if you can put more than a message and a link to explain it, to try and be more helpful and to reduce queries, especially in April. Yeah. That'd be my
that's
thought.
that's the interesting aspect of the 27% figure there. Yes, and we're actively communicating about the change, because I think lots were fearing that actually putting the message alone may be more confusing. So they're actually issuing letters or messages or emails or other forms of communication or broadcast to their employees to stop the payslip triggering query.
With pluses and
minuses,
that. What would you say to those that are still undecided? Is there any kind of additional advice or guidance we can provide for those still not quite sure what to do?
Well, I can only say the capability should probably be in your pay solution to allow you to do messaging. Certainly is in the SD Work solution, so find out about that. Don't always expect it to be automatic though, because it's not a legal requirement to show it. And so lots of the software industry will give you the choice. Some of the smaller ones may not give you any choice. It will just be there don't think that's a problem necessarily. It's just some may find it a little bit of a strange message. And we've talked before of actually the health and social care levy is an English thing. So if you're a little business in Aberdeen, you are paying this levy, but what it's spent on is up to the Scottish Parliament, not the English or Westminster government. Although it's a UK-based levy, it's not a UK-based health and social care levy.
Yeah, no, nice point. Well, let's move away back from the poll and jump back into something you mentioned in your introduction, Simon, about things that you are passionate about talking about, which is national minimum wage. And in particular, we've got some increases which take effect from the 1st of April. Wonder if you could guide us through the increases and what it means for payroll.
Yeah, sure. And I probably mentioned a little earlier, and let's revisit that. The application of the national minimum wage, well, we talked about that in relation to health and social care levy. Let's now reiterate that with national minimum wage. And if we go into pensions, we'll find it's different again, because they all have their own decision points. They're all unique and not connected. So national insurance and tax is related to when you pay it. National minimum wage is not. National minimum wage relates to the start of the pay reference period. So for pay periods that start from the 1st of April, on or after, the rise applies to national minimum wage. If the pay period started on the 30th of March or the 29th of March, and then goes to the 28th of April, the pay period has started before. And again, it doesn't relate to necessarily to when work is, although it has some correlation under Section 9 of the National Minimum Wage Regulations. Then you've got subsection C, which can relate to when timesheets are associated and which rate applies. But in effect, pay rise is for a pay period starting on or after the 1st of April. So some queries may come in saying, why haven't I got my days for the 1st, 2nd, 3rd, 4th, or weekly payroll, for example, paid at the new minimum wage rate? Why is it paid at the old? The legal requirement is that actually you only have to pay it at the old. It's only for the next pay cycle that it has to be paid at the new. So that's one of the oddities about it. The other aspect, I guess, on national minimum wage is the 21, 22-year-olds. We've talked about this on prior sessions, but remember, they've had quite a rise. I think it's over 11%. This is a stepping stone, I would suggest, to the national living wage rate age band dropping eventually to 21. So this is kind of halved the gap. So you'll probably find in future the gap is removed because the age is dropped to 21. So the intention of getting there certainly by 2024, as there is for increasing national minimum wage, national living wage rates for 2024 to a new target value, which will be much higher than the £9.50. So yeah, quite passionate about national minimum wage. There's an expression that we're kind of coming out with in SD Works, and you may see this, which is minimum wage, maximum confusion, because minimum wage law is really confusing. Certain aspects of it don't count for minimum wage. For example, if you come in and do time and a half, the half pay doesn't count for minimum wage purposes. And if you salary sacrifice or have a deduction, the auditors will ignore the half pay. That's cash in the hands of the pocket of the employee, etc. They'll look and deduct anything off the standard single pay. And if you've underpaid, they'll make you top it up. So it's an element of really understanding really complex, maybe that's another one, we'll call it minimum wage, maximum complexity. It is really complicated. Quite often we'll talk to people and say, have you got a minimum wage problem? Is there anything we can assist you with? No. We pay £9.50, so we're all good. And it's not about the pay rate, it's about the pay received for the time worked. But they do quarter-hour rounding on time machines. So if you're in at at 5 to, they'll count that from the hour, or if you're in at 5 past, they'll count that from 15 past. HMRC, national minimum wage people, are going to say, why didn't you pay the 10 minutes?
Mm.
In
There you
breach of
go. Well, it's
minimum wage law.
a good example for everyone who's
yeah,
watching this, who already understands and knows how complicated payroll is. I think one thing we've got to try and do, maybe SD Works can do it, is get that message out to everyone else, because it's not easy, as these PQTs really show.
Nope.
What's the impact then on maternity in Alabaster?
Well,
Talking of complexity.
yes, the Alabaster rule. I mean, everybody starts cursing and going dizzy at this, or feeling ill, or they think they've got a touch of COVID maybe. But under the Alabaster rule, any pay rise that occurs during the maternity leave period, going back to the qualifying week average earnings 8 weeks calculation, any pay rise in between at any point affects SMP for the whole SMP period. So this rise to national minimum wage, if anyone's on maternity leave now and their earnings average and their pay, etc., is under the 950, you need to top it up. That's an entitlement they have a right to under the Alabaster rule. So national minimum wage rise is a pay rise, and there's a requirement to undertake the Alabaster application. You could say, what's the risk? I think the risk is nothing if they don't do anything about it. But if they do something about it, it would potentially fall under discrimination, which has no upper limit on the ET findings. It would be considered sex discrimination towards someone that has protected characteristics. So that's the risk. Will people bother to do that? Different matter, isn't it?
Sure. Well, we've had a couple of questions come in, so thank you, audience, for bringing those in. I'll come back to you, Andy, if we can, in just a moment.
Yeah.
We've got the first one, which comes in from Salik, which says, we passed the employer NI saving for salary sacrifice for employee personal contributions, sacrifice salary, to the pension pot. From this month, an extra 1.25% would be saved by the employer. Do you know what will happen next year when it will become a separate tax charge? Will there still be an employer saving on the sacrifice salary for pension? So there's probably one for you here, Andy.
Well, I'm not aware of what the decision is yet in terms of health and social care levy, how that will work in 23-24. I don't know if Simon's heard yet, or whether, if he might have heard, he may not be able to say anything. But at the moment, well, it's national insurance. Yes, obviously that will get into the pension pot. But if they're going to treat health and social care levy the same as national insurance, then salary sacrifice will still apply. And therefore, by you adding the extra from the employer's NI saving, that's really good to keep those pension pots topped up to the max, really. But I don't know yet. I've not heard.
Yeah, I suspect that Andy's correct in what he's saying, that the saving will be there because they've not actually earned that money. However, there are risks to you by doing that top up. And the risk is that if someone goes on maternity leave, you have to maintain that top up, yet you've saved nothing. And Andy may be able to talk about that, but employer contributions have to continue as if they were working, and you won't have any saving to cover it.
Sure. Now, for the apologies, a moment there, we had an extra panel guest just join us, because when I asked that question, Alexa started answering it for us. So apologies, I just twisted off in the background. We've had another question come in from Emma. I think we may have answered this already, but I'll just run it through again just in case, which is for you, Simon. When do you think the national living wage age threshold will decrease again in the future? We had a little bit of crystal ball come out.
Yes. Yeah, there was a plan. I mean, I'm saying this from a memory, so forgive me if my memory is slightly out, but my memory tells me that the original plan was for 2024. May have to verify that. However, take care, because you may find the gaps shrinking. So you may find that next year, the 21, 22-year-old gap may be halve it again. So it's rising rapidly.
And bringing us back to the dreaded word of alabaster, Joe Panto has asked, if an employee is due alabaster back pay, when do we have to pay it back to them, please?
As soon as you can. So next pay period that you identify the rise, just pay it. You can still claim % from the government, just add it as SMP onto the payroll return, and you can claim back that 92. So include that extra top up on your EPS, well, the reclaim value on the EPS, and you'll get that covered. So it's in effect, from the period the rise is applying, really, you should do the back payment of SMP, I would suggest. But
Super.
as soon as.
And Andy, I cut you off to ask that first question when you were in mid-flow on the impact on maternity alabaster. So I'm going to bring that back to you.
Yes, yeah, I was just going to say about just from a general perspective in terms of what's going to happen in April, because the national minimum wage has gone up. You may now find that there's people that weren't, maybe part-time people, that now are starting to earn above the trigger point for automatic enrolment. So you may find that April has a little influx of people being automatically enrolled. And of course, they may opt out as well. So you may find a little bit extra work within the world of payroll generated by that. And also what has already been mentioned is, if you have got a salary sacrifice scheme in place, pension salary sacrifice, or even any salary sacrifice scheme, you need to look to see whether or not you can still apply that salary sacrifice. And don't forget, national minimum wage, if you get an inspection and you discover you're informed that you are actually underpaying and you've got to work back possibly up to 6 years to recalculate what should have been due, the same will apply to automatic enrolment. When you pay those national minimum wage arrears to someone 2 years ago, when I should have had extra £10, that £10 may mean that person triggers in that week 2 years ago, and they should have been enrolled in that week 2 years ago. So it's not just a simple tax national insurance type of view. You've got pension involvement in national minimum wage arrears set up. So be careful, and just be aware of this. As we know, it's complex. Payroll is complex now.
It is complex.
Yeah.
Well, let's move on then. Last payroll question time, we talked a lot about tribunal compensations. We highlighted the P&O ferries situation, which continues to roll on in the news with the first, I think, cases coming through now. But it has actually resulted in a few things to consider from a payroll perspective, one of which is the new statutory code of practice to prevent fire and rehire. And we're going to discuss that as well as what the long-term impact of that statutory code is. So back to you, Simon. I wonder if you can just elaborate a little bit more on the P&O situation and this new statutory code.
Better get on the microphone again. So yes, it's been an interesting few weeks on the P&O affair, to the extent that the CEO was summoned to Parliament, made an admission that they had broken the law as an organisation, but felt it was worthwhile because it would cost less. And that's a practice that we sometimes see in some of the social media, even for smaller businesses, of thinking that sometimes the employer thinks the employee won't complain and they'll just live with it, or don't know their rights, and so we'll move on. And there are time limits on activity. Obviously, the government I think, have become a little bit annoyed over some of the response of the company, and so have launched 2 initiatives, I think there are. And one is new statutory code to prevent unscrupulous employers using fire and rehire tactics. But we'll see in social media or even the press that that's not unusual to P&O. That's possibly being used elsewhere, where people are basically being saying, can you sign this new contract starting Monday, or else don't bother turning up because you're out. And so the practice of fire and rehire, which refers to when an employee dismisses a worker and rehires them on new, less favourable terms, is being actioned to. So the code will include practical steps that employers should follow. Court or employment tribunal will take the code into account when considering relevant cases, and the power to apply an uplift of 25% on an employee's compensation if an employer unreasonably fails to comply with the code. So the challenge with that is if it's taken to tribunal, the ruling of the tribunal could be uplifted by a further 25% onto it. So it's an element of this is all a reaction to the P&O case by the government. There has been an exchange of letters. They're quite interesting to read, or I'm just boring, one of the two, between Paul Scully of Bays and the CEO of P&O, with an increasing anger growing. The other aspect, of course, is the implication of national minimum wage, because it was claimed that the employees on that were being taken on board were being paid less. And so there are new national minimum wage laws which have really been turned around really quickly that enforce that ferries docking on British ports and on corridors, they call them, to the European Union. So negotiations be held with Holland, France, Belgium, Ireland, that national minimum wage rules have to be complied with. So national minimum wage rules will apply to the workers on those ships. And so it's been interesting to experience the debacle. I think they're trying to sail again from Dover today.
Oh, there you go.
Don't know if they've achieved it, but we'll see how it goes.
Excellent. So what do you think is the long-term impact here? I mean, presumably had this been in place before this has occurred, it probably never would have occurred in the first place. So do you think we've done enough to prevent it happening again? And what do you think will be the long-term impact?
Well, in relation to the individual employer, I don't know, but I think it's an element of thinking of business in the UK in general, isn't it? And thinking this actually means we've got to think in different ways. And for a Conservative government, bringing in employment protections, you probably think that's foreign land some years ago. But of course, governments are elected by people, so, not by businesses. So they're not always going to think that way. We could actually say it's a little bit more left-wing than it used to be in some of the policies that are being directed here. But there is this advancement of protection, possibly because protection of the worker brings in increased tax revenues for us to spend as a nation. But interesting times. So there are implications elsewhere. We could think this code relates to P&O. This code doesn't relate to P&O. It relates to everybody. Sure. And that's what we've got to consider.
I think it's interesting as well because the regulator obviously were interested in this. If a company is in distress, is what they're saying, then actually is their pension scheme fully funded? And in fact, it's not. So we are actively helping the trustees and and with the employer about let's get this pension scheme funded because those individuals deserve their pensions. And also, are these new people workers for automatic enrolment? National minimum wage applies, or are they not? And that needs to be identified and sorted out. So actually, there's a lot of stuff going on in the background as well,
For sure.
I mean,
some points I need
to
consider.
If a business isn't viable, what's the answer? Because breaking law isn't an answer to a non-viable business, is it? But I guess it's difficult, isn't it? Because you think there are risks of another 2,000 jobs potentially that haven't been shed. But equally, there's probably a view of thinking, but you're owned by a parent that's made a lot of money over the years out of this and still make a lot of money. What's going on?
Yeah, I think most people are in that camp. Well, certainly that's what you're reading and seeing, and rightly so, would be my opinion. So it's moving on.
Sorry, Nick. I just thought I'd mention, just picking up on that. It doesn't, from a regulator perspective, we don't care where the employer is. We'll go after them. So because it's the individuals who are going to suffer, not going to get their pension. So as a mining company got taken over, and they hadn't paid anything to the pension scheme, and I think it was a German company that owned the UK arm, and so the German company have now paid the full, can't remember how much it was, 100+ million whatever pounds into the scheme. Might be less than that, I can't remember, but it's we don't, we will pursue our powers are strong enough to go to an overseas country and get money out of overseas employers, which is important.
Absolutely right. Well, staying on the transport theme, but moving away from ferries and tribunals and into the world of eco-transport schemes and electric cars, I think two of us are in electric cars already, Andy, so you're the odd one out on this one for the moment. Some of us may have already taken advantage of these plug-in grant schemes, Simon being one of those. We had a good chat about that a moment ago. So let's talk a little bit about these schemes. The government has committed to a 2-year extension of plug-in van and truck grants. Now, loads of conversation in the social groups and online and Facebook groups and beyond about these different schemes, about electric cars, about the changes that are to come. So, Simon, if you'd like to take the floor and tell us a little bit about the recent extension and, yeah, take it from there.
Well, you're probably the expert more on those than I am, Nick. But I can certainly say in 2004 I had electric charging point fitted to the house, and at that point it actually cost me nothing. I think we kind of joked earlier, if I'd wanted the version that I pressed the button, it told me a joke, I'd have to pay £95.
Yeah.
But I didn't. I chose the cheaper version, which was free. And I am actively using it. The funny thing is I didn't have an electric car in 2004. It's just these people came round fitting them and saying they could be covered partly or wholly by grants, and they were. And I guess that's an extension of encouraging eco-transport. So I actually have an electric car. I'm not going to say its electric range is absolutely fantastic, but it's nice for what I use it for, and makes a change. I guess there's an element of affordability, but we are seeing a lot of launches of eco car schemes via employers, and we've had lots of inquiries. I'm not sure if people are really understanding some of the detail of what they are, because a lot of them have asked us to implement a salary sacrifice scheme for an employee to buy an electric car. I think there's a couple of things there, and you'll see common themes. When you run an operation of a salary sacrifice, the employee actually absolutely buys nothing at all. They're not buying anything. If they are, you take it out of their net pay after tax and national insurance. They have to tax it and national insure it before you buy, because buying things like that is not tax and NI free. But if you operate a salary sacrifice scheme, because certain car types fall outside the OPRA law, and the optional remuneration law meant that if you salary sacrifice for things except some exempted items, the taxable benefit was either the higher of the benefit of the item or the salary foregone. So if you ordinarily sacrifice for a company car, which was popular years ago, and say the car tax, because it was a low emissions car, was say 10%, that might be cheaper because you've saved 40% tax in your sacrifice. You've now been taxed 10% of the value of the car. That comes to half the amount. So actually you've saved 20% tax. Wonderful. Under the OPRA law, when it was introduced back in 2017, that wiped it away. So in effect, the taxable benefit of the car is the same amount you've sacrificed, but it exempted eco cars. So eco cars don't fall in that trap of OPRA, and so you truly are taxed on the benefit status of the eco car, which before April 2021 was 0. So the company car tax on an eco car that met the conditions was nothing. So the car might be £40,000. Your tax liability is 0% of £40,000. But of course, from April 21, there is a 1% liability charge on electric cars. So now you have to report it. It's a company car. Yeah. Lots of people are telling me, but this isn't a company car. It is a company car. All right, salary sacrifice eco cars are not company cars. They are company cars. Now I'm going to repeat that probably a third time. If you're operating a salary sacrifice eco car purchase scheme, you're giving a company car to your employees, and you fall under company car obligations to report. And last year, 1% tax charge, class 1A on the 1%. This year, 2% tax charge. So from 6th of April, the tax charge on eco cars has doubled. So you're going to pay 2%, 100% more, and your class 1A will have gone up 100%. on that car. Is it worth doing? I think we'll have a number of people, probably even on the call, that have implemented these schemes, and they'll say absolutely, saves money,
agree.
but it's
Absolutely.
not free.
No, and
Yes.
mine is, I've been through that process myself. The other thing to bear in mind, it's not necessarily highlighted here as a bullet point, but something that I've discovered as an electric car owner myself now. For those worried about fuel price rises at the moment, and people saying, we had a conversation at a previous payroll question time about whether or not the 45 pence covers the additional fuel prices. I think we agree that it probably does, regardless, it's got up significantly until it doesn't. However, if you are driving a company car and it's fully electric, the HMO advises that you only claim 4 pence per mile is used for reimbursing staff for electricity in their fully electric cars. There will be no taxable profits and no Class 1 national insurance to pay, which is obviously different to what the rates are for diesel and petrol cars. So that's something that I discovered when I did change the car over, and I put in my first claim thinking I could still get the 45 pence, and it was kicked back going, no, Nick, it's fully electric, it's a company car, 4 pence is what we can do. And it's a slightly different process. So for those thinking about it, that's worth bearing in mind as well.
Yeah, if it had been your own car and you'd truly bought it yourself, then 45p.
Correct. Yeah, but if it's a company car, 4 pence, which is a big difference.
Company. That's right, and that's why it's important for people to understand if they're offering salary sacrifice pension arrangement, eco car arrangements, it is a company car. You can't go above the AMAP rates because it applies for it. However, the other trick, and I guess this is just going into sort of chit chat a bit, is the nice thing I discovered when I got my electric car from my son, who used to work at Peterborough United Football Club as a fan appreciation officer, whatever, and a colleague of us said, oh, he's just got a company car, got an electric car. I haven't got a company car, it's my car. Got an electric car. Did he know he can park in the charge spot for free? And the electricity is free in all the council run car parks. And I didn't know, but it is true. So if you go to the council car parks and find a charge point there, point or whatever, there is no charge for charging your car, and you can leave it there for 3 hours free of charge. So I've now learnt all the others are scrambling for car parking spots for Peterborough United. I know, impossible, you say, in the bottom of the league. But there'll be plenty of spaces. No, but really, if you go there, you find the car parks are full. The electric spots, mind you, are getting more and more cars. I can park in there quite late, put it on charge, go to the match, come out, and it's cost me nothing.
Very good. Well, I think the other thing just to mention, because there was, this is confusion at home from my wife who asked this question, so there may be further confusion out there. We're talking about fully electric cars. So for drivers of hybrid cars, then you can still use the appropriate petrol or diesel rates. So we're not talking about hybrids, which of course utilize electric technology. Me and Simon here are talking about fully electric vehicles. And not everyone's necessarily familiar with the differences. If you haven't gone down this route yet, they are very different in terms of the way that they're calculated. While I've got you here then, Simon, have we talked yet about the plug-in grant scheme? I know we mentioned you took advantage of it. Just to highlight for those that are thinking about implementing an eco transport scheme or electric car scheme for their staff, what this entails.
Well, I'll claim no expertise on this, but and again, I probably know the sorts of things you know, but certainly I benefited from a prior grant scheme in 2004 in the early days, but now the VAT has gone on the arrangements, and as you're saying, there is a potential grant for installation of various equipment for your plugins to be fitted to the side of your house. Mine it's just on the side of the house. Some people have them in their garage, but I have one just on the side of the house, just where the car's parked.
Yeah, excellent.
It's worthwhile looking at.
Yeah, there's lots of things to look at online here as well, benefits and things. So worth exploring. Good. Well, let's move it forward. The dreaded word COVID-19. Hopefully one of the last times we'll be using this in a payroll question time and beyond. But there are still a couple of changes to consider. We're talking about the sickness policy and fit notes and managing COVID-related absence without isolation guidelines now that they've been removed. Obviously, we usually have a DWF supporting us with this kind of content, but can't join us this week. So we're going to come back to you again, Simon, to bring us up to speed.
Well, yes, I guess it's all an element of confusion. Again, we see a lot of social discussion about this, but the COVID emergency measures all ended on midnight, the 24th of March. So there are no COVID-related measures, but you need to look at your own policies and decide what they state, because some are kind of saying you wouldn't pay for COVID absence. In fairness, last week was it? There were 4.5 million UK people with COVID. I've got to say for myself, survived 2 years without COVID. And then suddenly, after grandson number 1 came home from school, they suggested to his mother that he gets tested. All he had was a little snivel. He did come back positive. Where would he have got that? He'd have got that at school, nowhere else. Then my son got it 4 days later, and that was it. Everyone else tested negative for 10 days. Absolutely. And then 2 weeks later, grandson number 3 came home from nursery, which closed because they had a COVID outbreak. He got it, his dad got it, and that variant, I'll call it a variant because I'm not sure if it's the same, just swept through everybody. So the whole family pretty much came down with it within 7 days. And it was light flu, fuzzy head. I found at one point with it, I don't know if others recognise, my wife, it was entirely different how she felt. She was nauseous, severe headaches. I didn't. I found myself anxiously wanting to do something, but not knowing what to do, if that makes sense. That was the conditions. Now, what do we do? Because the emergency measures have ended. I think there's a principle of the government saying, well, actually, it's now a bit like having a cold or a light flu. It's not really that serious for most people. What do you do? And then what do you do if someone catches it? So work-wise, do you operate isolation? Because there are absolutely no isolation law in place anymore in England. You don't have to isolate. You're asked to stay away from people, and suggested that maybe you ought to take some days off work, but legally you don't have to. So what do you as an employer do? Do you allow them in? Now you've got to pay for tests as well. Are they going to bother to pay for tests? They're not free anymore. So I imagine we'll go into an area of not testing at all, because why would you? Are you going to provide tests to your employees for free if they suspect COVID outbreaks, or are we back to herd immunity position really that maybe the government wanted in the first place? Did I say that? I didn't, did I? I think there's an element of...
We'll end up following a policy that we naturally follow with things like flu. That would be my guess. If you get it badly, whether it's COVID, flu, or something different, no one wants you in the office because no one else wants to pick up what you've got, and a little bit of common sense hopefully will start to prevail.
Yes. So standard SSP rules apply. 4-day PIW, that was always the rule. That was a 4-day PIW had to be formed, but there are now 3 waiting days. If they've had another absence within the previous 56 days that formed a 4-day PIW, the waiting days sort of merge. So they may have already been served, pay SSP. If you're telling someone they can't work and they don't feel that they're ill or sick, but you're saying they shouldn't come in because you don't want them, then you're potentially in grounds of medical suspension. Medical suspension is full pay 28 weeks. So there's an element of, are they ill? Because no medical professional is saying they are, and they're saying they're not ill either. So there's an element of taking care. And in things like the public sector, they would require them to take the time out. But equally, the public sector policy is you pay them full pay anyway, always was. So there wasn't a you get SSP only. It was, if you work in the NHS and you have to go off and you're an NHS employee, you get full pay. So it's an element of thinking what the considerations are for some of those aspects. And the confusion comes in when you're bank and not really NHS, you're agency and so forth and so on, of who is the real employer, etc. So interesting times. The other aspect is the launch this week of the digitization of FitNote. Should we go there? So the FitNote no longer has to be signed by a medical professional. It can be issued by them electronically or on an app. and issued to the employer. So you can accept the fit notes from that new digitized version. There will be a mixture of old paper and new digitization that comes in because the paper was on the desk and they could obviously use it. Whereas when their supply runs out, they'll have to go fully digitized in the doctor's office. So just be aware of that. I've seen a lot of social media discussion this week on people saying the doctor said I was fit for work on a fit note, but my employer won't allow me to go in. Why are they ignoring that? It's a legal right, isn't it, for me to work? And the answer, of course, is if you've got a fit note and it says you may be able to work, the employer has to agree whether that's really the case or not, and they don't have to agree. They can say, okay, you got a fit note, it doesn't expire for 2 weeks, it says you could do light duties, we haven't got any, so stay at home, you're sick. And so you become an unfit person if the employer doesn't agree to the fitness requirements stated. Of course, when it expires, you haven't got any fit note or anything, you should be able to work. Does that help a bit on sickness and fit notes? It's all changed.
I do know that, touch wood here, that I've managed to avoid, to my knowledge, COVID so far, but I've never been more petrified of it than I am probably right now, because we've finally, after 2 years of not having a holiday, we've got a first holiday booked for the 14th. We're going over to the States, and you still have to do your fit supply test 24 hours before, videoed with a nurse. And if any of us in our family have it, then we can't go. So we're all kind of isolating now, hoping we stay free. It would just be that well-known law that we'll end up getting it now just before we go. So we're hiding ourselves away in our rooms, hoping to avoid it for just a little bit longer. Fingers crossed. But there are still obviously not every country is treating it the same way we are yet, which is very apparent. Right, we're going to move over to Andy's specialist subject here, some state pension changes. We've seen a 3.1% increase in the full new state pension. So, Andy, over to you.
Yeah, sorry. I have to keep myself on mute because I got a cough and I don't want to be blasting everyone's eardrums.
I thought you were clearing your voice, ready for the speech you're about to jump in.
Yeah, if only you know. Hopefully the cough will go soon. I think, yeah, the state pension is obviously down to DWP and isn't a TPR issue, but obviously it is going up, and which is really good for people in the current economic climate. Perhaps not as much as perhaps people were expecting, but that's a political issue, not for me to discuss. The lower earnings limit versus the for national insurance and the lower earnings threshold for automatic enrolment. So is probably a thing. Hopefully you've realised, you've picked up on the fact that Department for Work and Pensions, who decide what the thresholds are for automatic enrolment, have chosen to freeze the threshold for 22-23. So the 21-22 automatic enrolment thresholds, lower and upper, and the trigger are remaining the same for 22-23. But it had been tracking the national insurance lower and upper earnings limits, and of course the national insurance lower earnings limit has gone up for 22-23, but the AE lower threshold does not. So it's important, if you've got a scheme that uses the AE lower threshold, that you're not still using the national insurance lower earnings limit value for that, because if you do, you'll be under contributing and therefore in breach of legislation. So logically the payroll software will have it all covered, and that your scheme is directly connected to the AE lower threshold, and it will just be the same as it was last year. So but please just check, just make sure that you are using the correct threshold, and we'll see what happens with that, because the government plans are at some point, they talk about mid-20s, so 24, 25, 26 sort of time, that lower threshold itself will go, and it will be nil in effect. So people will start paying from pound or upwards. So watch this space, but there'll be a lot of, obviously that won't be something that just be sprung. It'll be known well in advance as to the effective date and so on. So yes, so please check your payroll systems, make sure that is okay. And I think generally, when you think about the change of tax year, we've already mentioned about national minimum wage going up. So please have a check to see that if you've got salary sacrifice, we've already mentioned, you may have these additional people triggering. You may, because of the health and social care levy, the national insurance increase, You may find that employers yourselves may be deciding to change your scheme from contributions to salary sacrifice. Maybe you don't have that at the moment, and maybe now that has become attractive. But remember, if you change anything in the scheme, in very simple terms, just check to see whether or not you need to consult your staff. And if you've got more than 50 employees, then you do need consultation for most pension changes. So just, if you are going to change anything regarding your pension scheme, then just investigate that from a legal perspective as well. Good to communicate, as always. That's my initial thoughts on that. I don't have anything else to add. Simon may have something.
Well, yes, I guess this is an area where some people say this is a statutory change. It's not a payroll statutory change. It's a scheme rule statutory change. And the scheme rules are set by the trustees of the scheme and the scheme administrators, really. And you need to verify, because some schemes will have been exempting themselves from or different to banded earnings. Some would have tracked the old contracted out principle of using the lower earnings limit for national insurance. Plus the timings are different, and that's the other aspect, is relating to the national lower earnings limit tracking will relate to tax year, whereas the lower threshold isn't. It relates to an effective point with the start of the relevant pay reference period chosen for that scheme, which can be different. And it's where we used to get the April bounce, Andy, to the extent that April payments, people think, will track the April thresholds. But if the pay reference period starts before the 6th of April, it's still part of the March pay reference period thresholds, and so doesn't. So you can have this kind of drag effect. But you can set your pay reference periods to be the same as the tax periods, in which case it would match. But lower earnings limit NI is different to lower threshold to lower earnings threshold. And then we've got this set 1, set 2, set 3 sort of concept. So some may have thought that old rules that they're applying matched and the minimum was being met, but now they've diverged. That might not be the case. Now, should software automatically identify and change this? My suggestion is no, because these are set by scheme rules. So you need to notify what the changes to your scheme rule. So there's verify it and inform payroll. Now, in the SD Work solution, can you put in to use the lower earnings threshold as the min start for a pension scheme and do banded earnings? Absolutely, you can. Will that automatically go up? Absolutely, or stay as it is? Absolutely. But if you've chosen the NILEL to be the lower and tracked, the NILEL has gone up and is no longer valid for banded pension AE schemes. I guess it could be for other types of schemes, maybe, Andy, if on different construction.
But you got to make sure you still got to make. But the key, you're absolutely right. You've got to make sure it's a qualifying scheme. And if you're using the lower earnings limit, then the actual banded earnings is lower, and it will be non-compliant. You're not paying enough E's and Er contributions into the scheme if it's a banded earnings scheme and you're using the LEL. So please don't do that unless your scheme, as you say, as Simon says, automatic enrollment puts you into a qualifying scheme. The qualifying scheme rules then take over. So what does the scheme require? But if it's a banded earnings scheme and you're using the lower earnings limit, not the AE lower threshold, then it will be non-compliant. You need to, unless, I mean, it may be that you don't have an upper limit, in which case it's probably going to be all right because you're paying contributions above. But you should just ask the question, the pension provider, is my scheme still a qualifying scheme if you've got the lower earnings limit as the setting? And as Simon said, if you've got a different concept of how pension pay is determined, that's just basic salary, then now your contribution rate's enough and all that. And that should be, those sort of schemes should be looked at least every 18 months. But they should be continually looked at, really.
I know we've been focused a lot on on the changes, obviously the 3.1% increase. I'd be interested to know, Andy, as an opinion piece more than anything else, nothing definitive here, but whether you think auto enrolment has been an overall success, because we know it has reversed the decline in workplace pension savings. There's some really interesting stats that said there's been a 10-fold increase in total membership of occupational schemes, rising from 2.1 million in 2011 to over 21 million in 2019. And Simon mentioned earlier that there's every chance that countries will start being paid from the first pound earned. But also, I remember when it's really hit the news when it first got implemented, a lot of people were saying, well, it's not enough. But what is, as an opinion piece, are we viewing this as being a successful scheme since its launch?
It has, yeah. Auto enrolment is a really successful scheme, and lots of overseas countries have been spoken to DUP and the pensions regulator, asking how do you do it? Tell us how it worked, and then they've gone away and implemented their own version. Ireland, for instance, I think has gone live or will be going live with automatic enrolment. Various other countries, I can't repeat those ones, but they're public. The Irish one is. It's very, really successful, and it's because you go in and you've got to do something to opt out, and therefore it's that sort of principle. The inertia principle works really well. But you are right. A lot of pension providers are saying, you know what, the contributions aren't enough. People might be thinking they're paying into a pension, and when they come to retire, they're going to be in a nice position to afford nice things. But actually, what's going in, especially if you're lower paid, may not be enough. So, and that's what the government's looking at. So looking at the contribution levels, right, changing the age down from 22 to 18, reducing the lower threshold to nil, and all those things will come in at some point in the future. You know, so yes, watch this space, but there will be advance notice. You won't just have it all of a sudden.
Am I correct in thinking that I may be wrong on this, but the bill hasn't been passed yet to extend pension automatic enrolment to job holders aged 18 yet, or has it? Have I missed that?
No, not yet. No, there was Richard Holden, the MP. He put forward a private members bill, but it didn't run out of time in simple terms. But the government, the pensions minister, has confirmed that yes, we are going to implement the changes. What we don't know exactly when. And I guess the government are concerned about affordability for employers if you do drop it straight away, certainly in the current economic climate. But 24, 25 onwards, sometime from that point, I would expect down to 18 for the trigger age and lower threshold to go to nil. And people have discussed we're getting rid of the trigger completely so that everyone goes in, particularly for part-timers. And equality, particularly could tend to be more females, part-timers. You know, is that fair? How can we get these people employed? And even self-employed is being discussed. How to get self-employed people paying into pensions, etc.
Well,
so
it's
a big debate.
2-year anniversary today. Time flies. We'll soon be in 24, 25, and it only seems like yesterday when auto enrolment was brought in. I can't believe how many years have already passed since that was even put in.
10 years this year.
Well, let's think about reflective bits then as we try and wrap up tax year 21-22. Simon, anything we need to think about here as we wrap up the financial year from before? And perhaps we'll jump into our last poll of the day as well in just a moment. But perhaps if we think about this while we're thinking about how we wrap this up, let's get the poll up just for everyone while we've got time. Sorry to drop it back a slide. And it sort of links to our pension piece, which is, have you reviewed your pension scheme rules for April 22? The options are going to be, yes, we've made changes to ensure we're still qualifying. Yes, but no changes were necessary. Not yet, but planning to. No, and not planning to, or this doesn't apply to us. So while we're getting the audience to answer that poll and just finish off that pension section, perhaps, Simon, you can kick off with wrapping up tax year 21-22.
Yeah, sure. Another little comment, I don't know, it may apply to some of our listeners today, and we've talked about pensions in other nations, but Guernsey, so if you operate in the island of Guernsey, bring into play what they call the state second pension from January 2023, which is a little bit like pensions auto enrolment. So in effect, if you earn up to a certain point, you then have to be in a pension scheme from £0 and contribute. So just to mention that. But wrapping up to tax year 2021-22, there are some timelines coming up. So we're now in the new year. all your stuff needs to really be in by the 19th of April. I know lots of you get a real pain with RSU issues, share options that are late, etc., which cause a lot of angst and difficulty, and probably a lot of duplications and misbalances at HMRC as well. But get the data in order. Month 12 for directors is sometimes unusual because you'll have been operating the alternate method of national insurance contributions all year, and then suddenly it goes very strange. And that's because in month 12, or the last payment in the tax year, or week 52, if they're a director on a weekly payroll, you're required to reapply the annual calculation, take off any national insurance that's already been paid, and the difference, which could be positive or negative, is the NI bill for the last period for them. Some don't seem to be used to that sort of activity. It's absolutely what the rules require under the CA44 is that applies. So you can't operate ordinary NI for a director. Month 12 or the last payment in the year, which is if it's earlier, has to be annual basis. P60s no longer need to be approved by HMRC Forms Unit, but you do need to comply with the RD1. So you can't just do your own thing, but you don't need to get permission anymore like we used to. So it's good luck with tax year end, really, and hope it all goes well. Make sure your data values, we get some people trying to do negatives in tax year for certain statutory values. You can't, the FPS will be rejected. So don't. Remember your final declaration on the EPS, and you'll have your P11Ds, your Class 1A to calculate, payments over for July, and Happy New Year, or Happy New Tax Year.
Happy New Tax Year.
1752.
Absolutely. Well, one of those poll results are ready to see what people have come back with here. Let's have a look at those results. If they've come through. Hopefully that's one. So, oh, look at that, neck and neck. Yes, but no changes were necessary, and not yet, but planning soon. So a pretty even mix again as before. Any comments on that, Andy?
Yeah, I think the key one for me is if you're not certain, you've got to check with a pension provider, see what the scheme rules are. So even though, for instance, it may be effective from the start, the first day of the pay reference period, to determine what should be the thresholds in use, for instance. But if the scheme rules require something different, which can't be below the minimum but can be above the minimum, then you need to go with the scheme rules. So or terms and conditions. If you got a group personal pension scheme, you said scheme rules to a group personal pension scheme insured pension provider, they'd say, what do you mean? It's terms and conditions from their perspective. So just follow the joys of terminology. I just thought I'd add that one in for you. Yeah, always check the scheme rules.
Excellent. Let's take it back to that last slide then, just wrapping up the tax year 21-22. I think for the first time ever, maybe with a slightly smaller panel, we're going to be finishing on time. We've got the last minute of me trying to cram everything in. I've given Simon complex questions on national minimum wage with 30 seconds to respond. So we've got a couple of minutes here, Simon, if you wish. Anything you wanted to add to finish off today's payroll question time while we wrap up the year, or Andy?
Not personally, I don't think. I think we've gone around quite a complex tour. It's just good luck to everybody. I don't know if there's any final questions out there that you want to ask, but we're around to help. As from the disclaimer at the beginning, we can't give you tax advice. If we did, we'd have to do full due diligence, etc., and it's regulated activity. But we can guide where to find information for you to make your own choices and find information, just to reiterate that. So there are expertise, and we have links to various communication sites. Nick and I will know that there are some great social groups out there where you've got to sometimes treat them with care, because they'll be on the street knowledge as well as professional knowledge, but it's a good place to use as a sounding board.
Well, I'll take this opportunity as well to say, if anyone's watching, still listening to this and watching the webinar, and you want to connect with myself, Andy, or Simon, please do reach out to us. Please do let us know what you want us to feature in future payroll question times. It's very much a service to support all of you. We try and pick the subjects based on the feedback you give us and what we think you want to know about based on what we believe is relevant, but you may have something that you're desperate for us to cover in a future episode. So do let us know what that is. You can find us, myself and Simon, on LinkedIn. We're here to support. And as he said, there's lots of social groups out there as well, which are there to help you all. The next payroll question time to get ahead of the curve is the 20th of May. So please do remember to sign yourselves up. It's at sdworks.co.uk/PQT. Registrations are going to be open on Monday for that, so do get yourself in there. And of course, if you can't make the show itself, you will get a copy of the slides and the show notes afterwards. But in addition to that as well, we will also release this as an audio podcast on the Payroll Podcast channel as well. So even if you don't have a chance to check out the slides and you just want to hear the content on your commute home, for those that still commute to an office, or your holiday trip or whatever it might be, you can put it on in the car and listen to it on audio as well. So plenty of ways to catch the latest episode of PQT. I think it just leaves me to say a huge thank you to Simon Parsons and Andy Nichols for joining me today on the panel. And I look forward to bringing you the next episode of Payroll Question Time on the 20th of May, 2022. Thank you, Simon. Thanks, Andy. Thank you, everyone, for joining us today.
Bye.